So we'll get started. So again, welcome to Expat Tax Thailand's live Q&A session. I'm Carl Turner. I'm the co-founder of Expat Tax Thailand. I'm joined by my colleague, Kun Ponsuda. She's a fully qualified CPA and auditor, and she can help answer any technical questions. She's worked for some of the largest international accounting firms in the world. The purpose of today's webinar is to help people really get a better understanding for the changes to the Thai personal income tax for foreign sourced income. So at Expat Tax Thailand, we're here to help individuals understand the tax filing needs and their obligations to really help people make better informed decisions. So there's quite a few questions coming in the Q&A. That's great. Just keep them coming and we'll answer them throughout the session. So you can ask any question you'd like through email as well, carl@expattaxthailand.com, or through our website in the Q&A section of the website. So the revenue department, they've actually gone over and above what they've needed to in terms of the information that they've provided and guidance notes. And now they've produced a few videos as well. So it's our job at Expat Tax to really get this information out to individuals so that they can actually understand what this all means. So this will be recorded for those that have just joined. So we'll send this out within the next week. And also we'll provide all of the questions that have been asked and model answers as well, so that you've got all that as well. So quick disclaimer before we get started, standard disclaimer, the content provided is intended for information purposes only. It doesn't constitute professional tax advice. It's general information and it shouldn't be seen as specific tax advice to be acted upon. Okay, so now that's out of the way. Our commitment at Expat Tax Thailand is to answer every single question that we receive by email or through our website or through the chat today. We've had over 200 questions from the attendees for this webinar and from the subscribers. So the format's slightly different to what we expected. So what I've done is that I've actually gone through all of the questions that we've received and put together a list of the most common questions and the reoccurring misconceptions. And what we'll do is we'll aim to go through these all today, and we'll also aim to go through some of the Q&A that are coming through live. Please note that we do have a Thai tax podcast as well. So we answer a lot of the common questions through there and through our guide as well. So if you do have any topics you'd like us to have another webinar on, please let us know. We'll have one next week on double taxation agreements. We actually have a double taxation international specialist to actually answer questions just on the topic of double taxation, because we've had so many questions and it's an area where people really need help with this. So on to the questions that we'll answer. There are 9 specific topics that we'll go through today. What I'll do is I'll read out some of the questions that we've had on each topic and then answer them on here. I think it will really help listeners get a better understanding of the tax rules and their own obligations. And then what I'll do is then we'll go through the Q&A questions. I imagine 90% of the questions will be answered from these Q&A actually. So the key topics that we'll go through today, there's a lot of questions on pre-24 funds and the rule around income and assets that keeps coming up, and there's a few misconceptions with that. Thai tax residency, we'll answer some questions on that. Visa and tax declarations, information on gifts as well, that keeps coming up as regular questions. Tax implications on money transfers, what documents are needed to comply, how will the Thai revenue know? That's a very common question. And then on to the big topics, which is double taxation agreements and source of funds and taxation on different types of asset classes. So within this presentation and the Q&A, what I would really like to help answer are 4 common misconceptions that we keep seeing again and again. So the first one is regarding what's actually taxable that moves into Thailand. Is it everything that's transferred, or is it only certain asset classes? Well, we can answer that. It's not everything that's transferred. It's only things that class as foreign source income. Another thing we want to answer today is tax on the pre-24 assets. We'll go through that with the questions. The double taxation, what are the protections and what does this actually mean if your country or the jurisdiction you have assets has a double taxation agreement? I'll explain some of the common misconceptions, like it means there's no tax to pay. That's very common that we see this. And also for specific purposes for assets that are remitted. I get asked all the time if I'm transferring for school fees or condo purchase or whatever. It actually doesn't really matter what it's coming in for. It depends on the source of the assets. So let's get on to the questions. So first topic is pre-2024 income and assets. So we have a lot of concerns around the new rules. So in November, there was an announcement that anything that's in the bank as of the 31st of December 2023 and is remitted into Thailand afterwards is not classed as sourced income. It's classed as pre-2024 savings. So that's basically what we want to go through with these questions. We've had a lot of questions on these. So now we'll start to go through the actual questions. So first question, if I bring my money into Thailand from income earned before 2024, is tax payable? Well, no, simply cash in the bank from 2023 or before is allowed to be transferred in the future without any tax liability. Next question, I'm hearing that funds from Canada in my transferred to my Thai bank accounts is now subject to tax. What about the underlying cash that's been in my account for many years? So exact same question. If the money's in the account before 2024, that can be remitted to Thailand anytime in the future. Next question, all monies I have are saved before 2024. Am I required to declare or not? Is it taxable? So no, it's not taxable if it's remitted from pre-2024 savings. Doesn't need to be declared or filed because it's not a taxable income source. Next question concerning income. Okay, that's pretty much the same. Is this exception only for cash? So we get a lot of questions on, I've had a pension for 20 years. Does that mean because the date of the valuation and the date of the income from the investments starts on the 1st of January? No, it's only for cash in the bank where this rule applies. For everything else like investments, pensions, anything like this rule doesn't apply. It depends on how long you've held the asset for, whether there's capital gains or whether it's a pension and it's income. So next question. So many expats have financial savings in the bank in my home country. Those savings should not be regarded as revenue for tax in Thailand, as I understood this correctly. And they've made a list of savings as at the end of 2023. Yes, so it's very prudent to make sure that you get the bank statements as of the 31st of December 2023. Then you can show this in the future that this account is from before the rule changes. And also it's important that you don't add any new money into there, which is taxable, because then it's not easy to distinguish between non-taxable and taxable assets. So that was a good question. What are the rules around assets owned before 2024? How are stocks considered? So like I mentioned, stocks, investments, pensions, this doesn't follow this pre-2024 rule. Stocks, it doesn't really matter if you've held before 2024 or not. It depends on the capital gains on the stock since you owned the stock. So next questions are on tax residency. So these questions might be good for Suda to answer. She's been waiting patiently. Hi, Suda. Hello. Yeah, it seems like I can't hear you. It seems like it's on mute. Yeah, it's still sound's not working on Suda. So the questions were, if you're a Thai tax resident, when do you become a Thai tax resident and when to apply? Can you hear now, Kumpa Suda? Yeah, it's still not working. I can help answer this, Kumpa Suda. It's no problem at all. So Thai tax resident is 180 days or more in any calendar year. When do you apply for? I assume that means for a tax ID number. You don't need to apply for a tax ID number if you don't have Thai tax liability. So if you don't have Thai tax liability to file, then you don't need a Thai tax ID number. If you spend, another question, if you spend 175 days in Thailand, do I need to pay tax in Thailand? No, well, they're a non-Thai tax resident. So for foreign source income that's remitted into Thailand, that's not a taxable asset. If they have an income in Thailand, then that's different. That's a different conversation. But assuming this is just for foreign source income, then no, they don't have a tax liability on there. Next question, how does the revenue deal with income that's earned in a year when the taxpayer is not a tax resident and then later remitted when they are? Okay, that's pretty clear. So you can remit in income from years when you're not a tax resident anytime in the future. So just keep that noted down. You're only liable for tax on assets that are remitted to Thailand when you are a Thai tax resident. Okay, next questions, visas and declarations. Will any tax be deducted by default when the funds are brought into Thailand? No, they won't. So all these questions are the same. It's all regarding withholding tax from the bank. And will the Thai government intend to implement this tax through the bank as a withholding tax? No. So it's not deducted at source or a withholding tax at the bank when you receive the funds. It's down to personal income tax return for you to declare what the tax is that's due. So this isn't needed for visas either. That's a different department completely. Is the tax declaration needed for visas? A visa renewals, is it needed? No, there's nothing in the rules to state that for visa renewals, people need a tax ID number or they need to file a tax return. That's completely separate to their visa status. If they have Thai tax obligations, then yes, they have to file a tax return, but that's not necessary for a visa if they don't have personal income tax. Are LTR visas exempt by royal decree? And also another question on LTR wealthy pensioners, are they exempt from tax from foreign source income? Yes, so we've had a lot of questions on LTR visas. And yes, LTR visas, there are two types which are exempt from foreign source income. So the wealthy global citizen and wealthy pensioner, they're both exempt from foreign source income with a royal decree. If you'd like more information, feel free to reach out with that. So gifts, we get a lot of questions about gifts. And I assume, I've not looked at the Q&A yet on here, the live one, but I assume probably 20-30% of the questions will be around this. Now, you can actually gift up to 20 million Thai baht to ascendants or descendants in any tax year. But what does gifting actually mean? Gifting actually means you'll never benefit or from the actual gift or receive the gift back at any time in the future. So if you do benefit from the gift, or for example, it's someone in the household and it's seen that you are going to benefit from the gift, then it's a gift with reservation of benefit. What does that mean? It means you've gifted the asset away, but you've continued to benefit from it in some way. That actually means that this potentially can be looked through and classed as remittance of the income. And it means it can be looked at in the future as well. It doesn't mean you do it this year, in 5 years' time, it could be reassessed and looked at, was this an actual gift, or was it just sent across and then you've benefited from this? So it's really important for gifts that it is a real gift that is not going to be benefited. If it is a gift, then that's fine. It can be noted down. But the conservative approach to gift assets is really to gift the assets overseas to the person that's being gifted to. Draw up a gift document that actually shows that the gift never needs to be returned. Get this notarized by a lawyer in that country where the gift is given. Get that converted into Thai and get that held on file, and have the person that is gifted to remit the funds into Thailand, and then the person that sent the gift never to benefit. So it's not as straightforward as just sending gifts to a family member. It should be, if you really want to make sure that it's a conservative approach for this in the future, they're the steps that we recommend. So tax implications of money transfers and remittance. So this is just a random question that I've had a few like this. I thought I'd go through this. I hold a euro account with Bangkok Bank. When is the payment I transfer from abroad taxable? So the question was around, if they transfer the funds to the Thai bank and it's in euros, is it only when it's transferred into Thai baht that it's actually a taxable transaction? No, it's when it's received into Thailand, remitted into Thailand. It doesn't really matter what currency it's held in Thailand, if that makes sense. Okay, next one. All I need to know is what happened in a situation like mine. Okay. I transfer money from my UK account via Wise. Is this money I saved through my working life taxable? Next question. I bring in extra cash to renovate my property, extra cash from a super to buy a motorbike, and extra cash to renovate my home in Thailand. So these are all questions around the use of the funds. So, this is what I mentioned at the start. It doesn't really matter on the purpose of the transfer in. It matters on the source of the money originally. So it doesn't matter if it comes from Wise or direct into Thailand from the source of income or via another bank account. What's important is, where's the original source of the money from? Is it from pension income? Is it from capital gains from investments? Is it dividends? Is it crypto gains? Or is it from cash in the bank from previous tax years? It's very important. It doesn't really matter what the purpose of the money is used for in Thailand. So I hope that clears up that question. So documentation and compliance, this is quite common questions that we get. We've actually put out a few podcasts on this subject and produced quite a lot of information, but we still keep getting received the information. So I thought I'd go through this. So there are two specific times. Kwansuda, is your sound working now? Might be good for you to answer.
Is that okay now? Doesn't hear?
No, it seems like not.
Oh.
Yeah, it's no problem at all. So there are two specific time periods to file. Most people will need to file by the end of March for the previous tax year. And then some people, depending on their asset class, the assets that they're bringing in, might have to file the mid-year tax filing as well, the half-year PND 94. That's for things like rental property income. So there's two specific filing dates. If people have more than 120,000 Thai baht of foreign source income that's remitted to Thailand, or as a married couple, slightly more, 220, then they have to file a Thai tax return, regardless if they have a tax liability or not. To get a tax ID number, they can apply at the local revenue office as well. So another question, keeping accurate records. What records do you recommend we keep in case we're audited? So as much as possible, to be honest. Every transaction that's sent across, where the funds are from initially, is very important. In my opinion, it's better to set up separate accounts for different types of asset. If you can keep the non-taxable assets separate from the taxable, Once that's remitted to Thailand, it's easy for you to keep track and to file properly. The next question was about, is the onus on the revenue authority or the individual to prove their tax position? 100% on the individual to prove that the assets are not taxable. Okay, on to common reporting standards. So this is quite a common question that we get. How will the revenue know? How do they actually find out? How will they deal with this? These are very common questions. So what I thought I would do is I'd explain quickly what the common reporting standards is and what actually happens now for Thai tax residents. So it's quite simple, actually. So Thailand signed up to the automatic exchange of information, common reporting standards in 2020. They actually received the first batch of data in September last year. Now, what is that batch of data? What it is, it's from 130 plus countries that have all signed up to common reporting standards. And Thailand's revenue department software plugs directly into the other revenue department software. And it downloads automatically every quarter for bank accounts, pensions, credit cards, ATM withdrawals, all of the financial assets. They actually get sent the account balances, transactions within that quarter, ins and outs, and for the people that are in Thailand, the Thai tax resident. So the information's already being remitted and sent to the Thai Revenue Department. It's up to you to file a tax return, but actually now Thailand can actually check to see on individuals' accounts what's been remitted. So that's common reporting standards. There are 130 plus countries signed up to this, and the information that they receive is pretty impressive now. And it's all received in an XLS file. It's easy for them to sort and go through. So I hope that sort of clears up a few questions. So source of funds and taxability. So other questions. So inheritance tax. Is inheritance tax a taxable source of income? We've asked this question quite a few times. So no, inheritance is not taxed as income tax. So it doesn't need to be reported on an income tax return. It can be from previous years. It can be from now onwards. Another question on here. British national living in Samui. I transfer money each month from a UK bank to Bangkok Bank, but the source of funds is not on the list. Okay, that was from savings and inheritance. So if it's from savings from previous tax years or inheritance, it doesn't need to be filed. You don't need to do a tax return for those assets. You might for other assets. Another question, how is tax calculated on bonds and other assets? So for bonds, it's the same as other investments. It's on the capital gains that are remitted to Thailand. So it's actually all to do with the amount of time you've held the structure and what the gains are on the overall structure. You can't separate out yourself, the capital and interest or income and just remitting capital. That's not how it works. It's the amount of gains within the whole bond or investment structure. Okay, next question. 70 years old, O visa, been in Thailand 5 years. Received my pensions in my Swiss bank account. The pensions are tax-free. I'm not a resident in Switzerland. So I think I should pay taxes if I transfer this money into my Thai bank account, right? So this is it depends question answer. So it depends on the double taxation agreement between Switzerland and Thailand. You need to check for those specific pensions. If it is, for example, like a government pension, some of those are not taxable in Thailand. But if it's a personal pension, which is not explained on here, then potentially, yes, it's a taxable source of income. If it's remitted to Thailand, it needs to be declared and taxed in Thailand as you're a Thai tax resident. Overseas salary. So questions on other sources of income. currently living and working in Thailand over 180 days, extra source of income being paid into Thailand, don't have a work permit, TAN, what do I need to do? Okay, so if you have an overseas salary that's remitted to Thailand, then yes, this needs to be declared and tax should be due on this overseas income. You might, if you've paid tax elsewhere, you might be able to use that as a credit. It's not clear on here, but yes, that is a taxable asset. Overseas income, I'm paid from a private company located offshore, pays me a dividend to an offshore bank account, then I pay tax on the dividend in that country, then bring the money into Thailand. So it's been paid from an offshore company to an individual, then the individual's bringing the money in. Yeah, that's a taxable, well, reading into that, that's a taxable asset when it's brought into Thailand as income. So it needs to be declared and paid tax on. Other questions, overseas credit cards. So we get a lot of questions about credit cards. I thought it'd be good just to clear up this so that there's no more misunderstandings. There is no rule in the income tax law in Thailand on credit card use. Now, there are in other countries such as Singapore and the UK, and I think that's because there are a lot of non-residents and residents using foreign cards, and it's actually been put into the law. For those jurisdictions, it's classed as remittance if you're a resident of that country and you're using a foreign card. In Thailand, there's no rule on this. So the problem with having no rule on overseas credit card use for a Thai tax resident is it's open to interpretation. And what a question should always be asked with all these tax rules is it within the spirit of the tax law? And is what's been used for, is it to circumvent tax? If it is, then it will be looked through 100%. If it's, if it's to buy the one-off item, then maybe potentially not. But it's open to interpretation. If what it's used for is not within the spirit of the tax law, then 100% this will be an asset class which will be affected. So that's up to the interpretation if people are under audit. So I hope that clears that up. A few other sources of income. So Thai rental property, is that classed as income? Should that be taxed? Yes, rental property income in Thailand is a taxable asset. That's one of the ones that needs to be reported on the mid-year tax return. Capital gains on investments. So I assume this is for overseas investments. Yes, for investments, anything that's remitted into Thailand, you're taxed on the capital gains within the structure since the start of the structure. So that when that's transferred into Thailand. Foreign equities, so that's the same. It's on the capital gains on the structure since the start of, since you've held that, not since you're a Thai tax resident. That's how it works. And then a question on gold and losses. So if gold goes up, is it taxable income? Depends where it's held and how it's held. Potentially, yes. It's overseas and it's in a investment account and you've got a gold ETF. It makes a profit. You sell that, remit into Thailand, you tax on the capital gains. Yes. Also about losses. You can't forward losses on in Thailand to the following years. So you can't use any losses, to offset any future gains or for other assets or other asset classes. I hope that clears that question up. Pensions from previous tax years, confusion. Okay, yeah, so I had a few questions like this. I thought I'd put this down and then explain it because some people were a bit confused. So someone who's got an Australian superannuation pension, they've had it for 7 years. It's grown overseas and now they're a Thai tax resident. Because some of this was pre-2024, does that mean that the income was accrued before they were a tax resident? And what is actually assessable? It doesn't really matter. If you're a Thai tax resident, it matters on if you've got a pension. It's if you remit the income into Thailand. It's only remittance. If it's left overseas, it's not taxed in Thailand. But if it's remitted sent to Thailand, then it's potentially taxable on the income for whatever is remitted to Thailand. So I hope that clears that up. There's nothing to do. There's no exemptions for pensions for pre-2024. Fixed deposits. So additional part of the question is if savings have been invested in or earned interest in the bank in the UK, which are bringing to Thailand, already taxed. Yeah, so, okay, so fixed deposits are taxed the same like investments. So it's on the capital gains. So what gains have been made, and it's a percentage of the gains that's remitted into Thailand. That's how that works. Capital, not gains. If I bring money in from accumulated capital, is that tax payable? No. If you've got investments and they've not made a profit and there's only the capital in there, you can remit that in without any tax implication or obligation. Commingled funds, yeah, we discussed this earlier. So it's important that you try and separate out those commingled funds and accounts so that it's easy for reporting purposes what is taxable and what is not. Okay, so on to the white elephant in the room, double taxation agreement. Many questions on this. It's a very complex subject and there's a lot of misunderstandings. We will put on a webinar next week with a double taxation expert to go through this in more detail because it needs a lot more work. So here are some of the common misconceptions for double taxation. I'll go through these now. So common misconceptions of the questions that we receive is they've got a double taxation agreement between their country, so tax isn't owed in Thailand. That's not true. Being taxed in one country exempts taxation in Thailand. That's not fact. Exemption of capital gains of overseas assets. Yeah, this is to do with double taxation agreement. If it's taxed in another country, it's not taxable in Thailand. That's not true if it's remitted into Thailand. And taxation of government pensions, misunderstanding. Yeah, so a lot of people have got this double taxation agreements completely wrong. Some double taxation agreements say, for example, Social Security, US Social Security, or some government pensions are 100% not taxable in Thailand. If it states it in the double taxation agreement between the country and Thailand, then that overrules the local rules. If it's not stated in there, then Thailand has a potential tax claim if it's remitted to Thailand. So, you know, we've had there's 61 different DTAs, double taxation agreements, with other countries in Thailand. They're all different. So we're going to put on a webinar next week with an ex-Deloitte and Ernst & Young DTA specialist speaker just to go through this subject. We've had questions in from UK, US, Australia, Sweden, Switzerland, Canada, Israel, Germany, Netherlands, Hong Kong on the double taxations. So we're going to put on a specific webinar for this. What I'll do now is try and answer some of the misconceptions and not really answer specifics. We'll answer some specifics, but that's the best way to sort of deal with this so people have a better understanding of what they actually mean. So, okay, this is a question. Does the Thai RD Revenue Department consider remitted funds to Thailand that have already been through the overseas tax process to be tax-free in Thailand? Will the Tax Revenue Department allow the home country's personal allowance or other countries' exemptions to be part of the tax paid process? It's a very good question. So I'll answer this properly. So just because tax is paid in another jurisdiction, if it's transferred into Thailand, it does not mean that Thailand does not have a right to tax this asset. If the double taxation agreement states that the asset, there's no right for Thailand to tax the asset, then potentially it's not taxable. If that is not the case, and it says something like may or potentially taxed in that jurisdiction, it means Thailand can tax you as per the local Thai foreign source income tax rules, and you might be able to use any tax paid as a credit against some of the tax that's owed. So it doesn't mean you don't have to file, and it doesn't mean that you potentially don't have tax. So I hope that clears that up. Also about other countries' personal allowance. No, you can't use any other country's personal allowance in Thailand. So Thailand has its own, Thai tax residents have their own personal allowance. So it's important that you use the Thai personal allowance. That's not really relevant for this for remittance of foreign source income. So another question, I included the full question for this one because it's quite a misunderstanding that people actually have a choice of where to pay if they're a Thai tax resident. So in this question, someone was actually saying, I'll get the money paid direct into my Thai bank account and it'll avoid me paying tax through the UK, but I might pay it in the UK because I get better personal allowances. Well, sadly, there's a set rule and you can't avoid or change which jurisdiction you want to be taxed if you are a Thai tax resident and you've got overseas assets. So for UK pensioners living in Thailand, for example, I'll give an example for UK because this is a UK question. You can't get an NT tax code for Thailand or it's very difficult. So what that means is it's all usually going to be deducted at source in the UK. And then if you transfer into Thailand, it's taxable in Thailand, but you can use any tax paid as a credit against tax owed in Thailand. That's quite common for a lot of countries. So we'll go through some other countries and questions. So that might help clear a few things up. US DTA question, is there a detailed guide of the effect of the law of US citizens that relates to the taxation agreement? Yes. So there are 61 countries with double taxation agreements with Thailand. In the email I will send out, it will have a link to all of the DTAs for all of the countries, and you can actually read through for your specific investments or savings or whatever asset you have. It's quite confusing, and that's why we're going to have a webinar next week on this. Next question, Netherlands general DTA question. What about the dual taxation agreement? How can the Thai government expect foreigners to have paid taxes on their incomes in their home countries to be happy about being double taxed? So it's not really about being happy. Thai tax residents have a Thai tax filing and Thai tax obligation. All that's changed with the rules is that you can't leave the funds overseas for one complete tax year and bring it in the next year. This has always been in the law. It's just a departmental order change to overrule the ruling from 1987. So it's always been in the law. And yeah, Thailand has the right to tax foreign source income that's remitted to Thailand. You can potentially use your tax paid in the other country as a credit. Next question, US Social Security and DTA. Get a lot of questions about this. I can confirm with the DTA in place with the US and Thailand, Social Security is not taxable in Thailand. It's not allowed to be taxed. It doesn't need to be taxed in Thailand. It's taxed in the US, and that has precedent over this. UK Army pension. So certain types of pensions in different countries, it tends to be government pensions or civil service pensions are not taxable in Thailand, but it depends on the DTA. For UK Army pensions, yeah, that's not taxable in Thailand. DTA misunderstanding, okay. Yeah, someone actually mentioned that with the Swiss tax discussion that was online the other day, you noted that pensions that are taxed at source, then Thailand has no right to tax. That's not true. It's actually, again, if it's transferred or remitted into Thailand, potentially there's a tax obligation to pay. So it's the same question, to be honest. DTA, how to file. So how do people with the double taxation treaty, how do they file this credit? So how does it work? You need to find out, you need to get a tax certificate or tax document to show the tax that's been paid in the other jurisdiction. This can be used potentially to file as a credit against any tax potentially owed. So that's on the onus again on yourself to prove that and get the information. Another DTA question from UK. Because the UK and Thailand has an agreement, plus money's already been taxed in the UK, do they need to worry about this? Well, potentially, yes. Depends on the tax rate in the UK and if it was remitted into Thailand. So yes, so State pension in the UK and private pensions are taxable in Thailand. You can use any tax as a credit. Danish pension. So same question, double taxation agreement, taxes already paid on the income in Denmark. Again, you need to check the DTA for that specific type of pension. Is that taxable in Thailand or not? Is there any special rules to say that it's not taxable? If not, then yes, it's potentially taxable in Thailand. If the tax you paid in Denmark is considerably higher than the tax rate in Thailand, you don't need to pay any more. But that's the purpose of the DTA, is to protect people against paying more than the tax rate in the country that you live in. Canada DTA, same question, just for a different country. Again, you've got to check the DTA for the actual country and the jurisdiction. Another UK, we've got a lot of UK questions, but there's quite a lot, the same amount as US and Australia actually. So this is about being taxed at 20% already. You've got to really check, because someone's in the 20% tax bracket, whether that's in Canada, UK, Netherlands, whatever, what they actually care about is how much tax have you paid? How much did you receive? So what's the net and gross? And how much of that was sent to Thailand? So then you can use that tax amount to deduct as a credit. So your tax rate might be lower than 20% overall, because you do get your whatever allowances you've had or exemptions in that other country. So you've got to be really careful. It's not as straightforward as saying it's 20% tax rate. You've got to really work out your gross and net, what you've received. US specific, US government and military pensions and 401k pensions. So US government and military pensions in the DTA, it specifically states that these are not taxable in Thailand. 401k and similar accounts, they are taxable in Thailand. So you can use any tax paid on these if they are remitted to Thailand as a tax credit, but there is potential tax to pay on these. Another one, confused question about QROPS DTA. Okay, so this question is about untaxed pensions. So pensions that are received but not taxed in a different jurisdiction. So, and also the other question was about drawing down and capital gains. So pensions are different to investments. Pensions are taxed on the income. It's not to do with the gains on the pension structure. So it's actually to do with the income that's remitted into Thailand. How much income has been remitted? Has there been tax paid on that elsewhere? Is there a double taxation agreement in place? If there's not a double taxation agreement, or there's no tax to pay in the other jurisdiction, then yes, Thailand has the full right to tax and there's no credit given. So if you'd like to ask more questions on this, feel free. Australia DTA, question on Australian government pensions and military pensions. So in the Australia-Thai DTA, these are both actually exempt from tax in Thailand. Israel DTA on salary. So again, we answered this question earlier, actually. It depends on, yes, it's taxable if that salary is remitted to Thailand, but only if it's remitted. And then the other question is, okay, paying for fees, ongoing expenses in Thailand, will this be taxed? Well, it depends on the source of that income again. You can potentially use the tax credits on the salary in Israel, depending on the DTA and the actual asset, but we need to look at it case by case. It's not easy to give you an answer. And Sweden DTA, taxes for expats. There is a DTA in place, but again, it depends on the asset, what you're remitting. So yeah, I hope that's been useful. We're going to have a specific DTA webinar next week with a Q&A, because the amount of questions on this is vast and there's a lot to it. So now what we'll do is go through the Q&A questions. So yeah, I'll go on to those now and we can answer some of these questions now. So we've got in here, let me see if I can open this up. We've got 47 different questions. I'll go through these now and answer as many as I can. And the ones where we don't have time or we don't go around to, I'll make sure that we email everybody who sent a question. I think a lot of these will have been answered. So let me go through these. Does Thailand have or will it have issue a tax credit system for taxes paid on foreign income? Yes, Charles, there's going to be a new, that's going to be possible. It's not on the online tax filing form, doesn't have this on yet, but yes, that will be added. Money purchase, will the pot at the end of 2023 be exempt from tax when I remit? No, that's an answer what we answered earlier about pensions, and it depends on the money that's transferred into Thailand. Let's look through these questions. When I transfer 30 to 40 million Thai baht to Thailand and declare it as a loan repayment, is it tax-free? Well, it depends. If this is a loan that is being repaid, loans are not taxable in Thailand. So it depends. If you've got a loan agreement drawn up and, it is a real loan that's being remitted, then that's not a taxable asset. It's really important you keep the documents on file, though, and make sure you get that checked out, because there could be serious tax implications if not. One question about gifts, we've answered that already. I live off my investment income previously taxed in home country, original capital, dividends, interest, capital gains. Will they attribute the funds if they are remitted to Thailand between what is capital, dividends, capital gains? So I guess this is a question about having things paid into a polluted account and then moving the money across. It's up to you to go through that and calculate what are the capital gains, dividends, interests on those assets. And so there's a lot of work with cases like that. Let's have a look. Will Social Security be in the US, from the US be taxed? Yeah, we answered that one. It's not taxable. How will they track transfers into your bank account? Again, we answered that. Common reporting standards takes care of this. Elite visa holders, are my tax exempt? No, there's only one type of visa now which is exempt from foreign source income, and that is the LTR visa. So that answers that question. What would you advise online English teachers? What can you advise here? Well, I assume that means that online means it's foreign source income. If that money is remitted into Thailand and the work's actually conducted in Thailand, it's fully taxable as foreign source income. The remittance, is all remittance that we bring into Thailand will be treated as income, or does it define and prove that the incoming funds are savings? Okay, so this question is about, yeah, we answered this at the start. It depends on the source of the funds. It's not all the money that's transferred in. It depends on the source of the funds individually and how that's treated. If I keep my pension in my home country and do not send it over to Thailand, but just live off my wealth I earned before 2024, do I still have to tax the pension in Thailand? Okay, so I think this question means if you don't send pension into Thailand and you just live off savings from previous tax years, yeah, that's not a taxable source of income in Thailand, and you don't need to declare the pension that's not remitted into Thailand. If you do remit that pension, then yes, that is taxable, or it's a potentially taxable source. I'm a UK taxpayer and up to date with all my tax returns. Will I be exempt from Thai taxes under the double taxation agreement? Okay, we answered that question. No, you're not exempt. Depends on if you bring that in or not. I receive a transfer of family member support that was tax paid in the original country. What process should I go through to prove that the tax was paid in the original country? I receive a transaction of family member support. Okay, so I think this means they're receiving money from a family member. So that's a gift. So it's important that if it is a gift, then it's not to be returned. That's how it should be noted down. Again, I do recommend that you get some sort of gift document drawn up, signed that it is a gift that doesn't need to be returned, and that should suffice. One question. What happens if I bring money in to buy a car or house? Well, again, we answered that question earlier. It depends on the source of the money that comes in. Okay, let me have a look at some of the other questions. Okay, good question. As a tax resident of Thailand, how are my investments with interactive brokers, in brackets, personal account, treated for tax purposes? Am I only required to pay tax on the funds that I transfer into Thailand, and are there other tax implications I should be aware of? So, yeah, good question. This is a general investment account. So an overseas investment account. You're only taxed on funds that are remitted to Thailand, and then you are taxed on the capital gains of the structure. So if you don't remit the funds to Thailand, it's not a taxable event in Thailand. It doesn't need to be declared. If you do, then it's on the capital gains which need to be declared. So I hope that's kind of clear. Live in Bangkok, work remotely for a European company. Paycheck sent to my home country, and then pay taxes of my income. Sorry, let me read this again. I live in Bangkok, but work remotely for a European company. My paycheck is sent to my bank in my home country. I plan to pay taxes on my income in Thailand, as I'm exempt for paying tax in my home country. My question is, if I bring the European income that I already have or plan to, sorry, the questions that I have already or plan to pay taxes in Thailand, will it be taxed again, or can I be sure I will only be taxed that I will only pay income tax? Yeah, I don't really understand. Difficult question to answer. If the income was paid before 2024 and it's in your account and it's not a taxable income source for this year, then potentially not. For new money, that's a taxable income source. It might be better to actually speak about that specifically. To clarify, you're saying that I should capture the balances of my overseas accounts as of the 31st of December, and I can transfer all that in tax-free. Yeah, so what I'm trying to state is, if you have the account balances as of the December 2023, then the end of 2023, that's not a taxable income in Thailand, as per the November announcement. I became a tax resident last year and probably be one this year. Tried to contact Revenue to get a tax ID for any money I earned. They're pretty insistent for me needing a work permit. I plan on looking for work next year. Okay, yeah. So sometimes with the Revenue Department officers, in the different provinces, sometimes they have been quite difficult for people to get a tax return. To get a tax ID number. You can get a tax ID number regardless if you've got a work permit or not, and you do need to file if you've got a tax liability. You need to file regardless if you have a work permit or not. That's a separate issue and conversation altogether. But for tax filing and tax obligation, yes, you have a tax implication. You need to get a TIN number. A few questions on gifts, we've answered those. Credit cards, we've answered those. Australian living in Thailand with a retirement visa. Only funds are transferred as they require 800,000 annually, and I live off that. I draw this from an account in Hong Kong. What do I need to do? Okay, so for that, again, it depends where that 800,000 that's in Hong Kong is from. Is it from pension income, investments, capital gains? Is it from income, salary, or is it from money from previous tax years? That's important with regards to how you file. Okay, let's go through these. Let's just have a quick read of some of these questions and see if I've got any more that we haven't already gone through. Can Thai government see overseas ATM withdrawals? It's a strange question, but what I'll try and answer is what I mean by common reporting standards and the information they receive. So if you are a Thai tax resident and the bank account, the debit credit card that you have has you as the Thai tax resident, a Thai tax address, then they already remit every quarter, every single transaction on that account, regardless if it was an overseas ATM withdrawal or in Thailand. So I hope that answers that question. What about stock options? Receive them into Thailand. Yeah, that's a taxable asset. It's on the capital gains within there. So that's quite messy. Let me have a look at some more questions. If I'm not in Thailand for less than 180 days, is there still tax to pay on funds remitted into my Thai bank account? So if you are under 180 days in a calendar year in Thailand, you're a non-tax resident, that means you don't have to file a Thai tax return for foreign sourced income. If you have income in Thailand in that 180 days, that's different. You have to file for that. But I'm assuming this is for funds remitted to Thailand from overseas, then that's not a taxable asset. Am I missing something? Is it an easy solution just to get an LTR visa and be exempt from foreign income? Yeah, good question. That's a good fix if you meet the criteria for the LTR. So the requirements are quite high. What this LTR visa is for high net worth individuals. You've got to prove the income that you're receiving or the assets that you have. It might be challenging for certain people. For some people, it might be easy to do. If you do meet the criteria, then if you do bring in foreign source income, then that is a very good option to look at that route. Yes. Doesn't Thailand have a gift tax? Yeah, yes, exactly. Good question. So gift tax rules are different to income tax rules. Gift tax rules are 20 million Thai baht for family members, ascendants, descendants, and 10 million Thai baht to anyone else. And the rate starts at 5% over this. So yes, it does have gift tax that's separate to personal income tax. So yeah, good point. I didn't mention that earlier. Okay, let's go through a few more questions. Because we're on to nearly an hour now. Okay, in the future, will 2024 UK income remitted to Thailand in 2026 be taxable? It's a difficult question to answer because we need more context. So I'll try and answer it for a hypothetical point. If you are a Thai tax resident in 2024 and you have UK income and it's not remitted to Thailand and it's remitted in 2026, then yes, that's potentially taxable in Thailand. Now, it doesn't matter what year it's remitted. It depends if you're a Thai tax resident when the income was earned. That's really important now. Okay, if I pay more than 50% taxes within my salary, given our overseas, Israel, and the maximum tax in Thailand is 35%, will I be taxed or not based on the DTA? Since I'm a higher rate taxpayer overseas, am I fully credited? It depends. So if the work is conducted if you can prove that the work was done overseas and the salary isn't for work conducted in Thailand, then you could justify that this is not taxable in Thailand. If the work was conducted while living and working in Thailand, then it's potentially taxable in Thailand as well. That's a separate question. If I withdraw money from a US ATM card, does that show on the common reporting standards? Yeah, good question. US is part of FATCA and not part of common reporting standards. US credit cards are not sent automatically to Thailand. That's a separate, that's under the FATCA reporting, and that's not, the automatic information isn't sent direct to Thailand that way, which common reporting standards countries does. Yeah, so I hope that's useful. Okay, I'm a Thai tax resident and I buy a plane ticket while overseas with my overseas credit card. Should I declare this? Would these be round trip tickets from Bangkok to another country? Well, Tom, I guess this depends on which airline you use. If they are a Thai, if you book it through Thai Airways, and they've got a Thai office and you pay through here, then yes, that's a taxable, that's remittance of foreign source income on that credit card. It just depends. If you're using, if you're buying things overseas, then it's different. But if for this specific question, it depends on the source there. Yeah. So I've answered quite a few of the questions. It's quite clear. There's a lot more with this. So what we'll do is we'll put together the Q&A questions. There's still some that we haven't answered. What we will do is get back to every single person who's actually asked the question. If they've put an anonymous attendee on there and asked the question, I can't really do much about that. If you could send me by email or through the Q&A question box on the website, I will get back to every single one of you. We'll have the webinar next week because we really want to make people have a better understanding of what's going on, and so they can make their own decisions. If you would like a consultation, about your specific situation, you can also book a consultation with one of our team. Just keep an eye on the tax alerts. We'll keep on emailing out any information that we receive and the podcasts. And if you do need support from our team, we're here to help. So thanks for attending and thanks for listening to me rant for an hour about taxation. And sorry for Kumpon Suda not being able to, the sound not working, but thanks for joining anyway, Kumpon Suda. She will help with a lot of the personal income tax filing questions as well. So until next time, thanks for joining and hope you found this useful.
Yeah.